Hello and welcome to a brand new edition of Inside Out on the Road. Today, I'm alone in the studio and Nigel is not with me. Now that's because he visited Honeywell Automation's plant in Pune to get us a deep dive into the company. So let's not waste any time and go across to Nigel, who's telling us all about the company and a management interaction as well.
Inside Out has travelled to Pune to cover Honeywell Automation. Well, the company has been an underperformer, so we thought, let's dig a little bit deeper. Now, on the stock price move, it's lagged its peer set in the past 1 year. Even on the margin front, the company which enjoys best margins among its peer set, it's seen a sharp contraction. Now it's delivering mid-teen margins. Remember, in the past, it used to deliver high-teen margins. One of the key reasons for Honeywell's better margins in comparison to its peers is that it has a larger proportion of service-based revenues. Even on the valuation front, Honeywell traditionally demanded a much higher premium in comparison to its peers, but that as well has narrowed considerably. Honeywell Automation in India is a leader in providing integrated automation and software solutions, including process solutions and building solutions. It has a wide product portfolio in environmental and combustion controls, as well as sensing. It also provides engineering services in the field of automation and control to global clients. Globally as well, the company is positioned as a digital services provider company rather than a manufacturing company. For Honeywell Building Solutions, it provides services for airports, commercial and residential buildings, data centers and mega projects like smart cities and metros. Now, all the automation of these projects are undertaken by the company. Remember, Honeywell bagged the 497 crore Bengaluru Safe City project, and there is scope for more such orders in smart and safe cities as well. For Honeywell Process Solutions, it serves in many core verticals like oil and gas, refinery and petrochemicals, as well as power. And in new areas, they've been focusing on life sciences, energy management and storage. Now, one of the key reasons for a weaker financial performance has been exports, as a percentage of sales has dwindled from around 45% to around 38%. Exports is more services focused, and so it commands higher margins. Now, a large proportion of this export services business is towards Honeywell's related parties. Since exports have contributed less to the overall revenue mix, it has had a direct impact on its margins. The company is likely to have faced an issue on the semiconductor front, as well as various other supply side issues. These problems have further been compounded by travel restrictions. Now, as is the case with various other MNCs, the street frets about cannibalization of business by the unlisted group entities as well. In its annual report FY22, the company says that demand is not an issue for them, and they added that the external order booking in FY22 has increased by 31%. Well, to understand more on the business and get some issues ironed out, we are joined by the MD of the company, Mr. Ashish Gaikwad. Well, Mr. Gaikwad, we're coming out of a very, very difficult period, which was this entire COVID wave, a couple of waves actually. And God willing, we never see anything like this ever again. But given the name Honeywell Automation, well, tell us, how did you all cope with it? Your focus is on digitization and also on automation. So give us a couple of examples about how you all coped with this very, very challenging situation.
Well, Nigel, as they say, every dark cloud has a silver lining. And that's what happened when pandemic hit us. We were pushed to our limits and we had to then think out of the box. People had no mobility. People could not go to the work. So we had to bring the work to the people. And the way we used automation and digitization was in a very smart way. One such thing that I would like to show to you is, here are some high fidelity cameras which we used on both ends of our work, which means in the factory as well as at the site where the work is going on. So people could virtually interact and virtually carry on the engineering work that is required to be done otherwise in a physical setup. And that basically did two things. We did not discontinue the work, there was no interruption, and also because people did not travel, we saved some cost on the projects.
So let's focus on a couple of other aspects there. Business has got hit because globally actually. One, because of supply side issues, and the other problem was that the chip shortage. That's something that worried industries across the globe. Could you give us a sense about, do you think the worst of that is behind us? Are supply side issues actually getting resolved? Point number one. And the worst of chip shortage issue as well, is that behind us?
Well, I think first of all, no one was spared when the supply crisis hit, right? And it had two components, I would say. One was the chips component, which is a big part of what we do here. And also the other thing was also on the other materials that we use.
Yeah.
So right now, the supply constraints on the other materials are really easing out. We can clearly see that we are coming back into the original shape. Also, there is a lot of localization drive that we could push, and so the supply chains were then locally made available. On the chips side though, I think there is still some work to be done. We are not yet out of the woods.
Since the chip shortage issue is such a big issue globally as well, when do you see this easing out then? You're saying we're still not out of the woods. Maybe in the next couple of quarters, do you believe by the end of 2022 or visibility could be there that the worst of this chip shortage issue is behind us and things will look up?
Nigel, I wish I had a crystal ball. But I would say this, that the trends that I see, and we monitor it every month, are really positive. And I believe that in the beginning of 2023, let's say, it'll be behind us and we would be back into a very regularized type of delivery.
Mr. Gaikwad, since you'll have a fair bit of exposure to the oil and gas space, and oil prices have surprised everyone on the upside. So if you could tell us about how is business flowing to Honeywell Automation, in terms of order visibility, etc. And also, what are you all doing? Since suddenly oil has become so precious, I'm sure that, a lot of the companies that you all deal with, you all would be trying to assist them in terms of automation, in terms of monitoring inventory levels. Give us a couple of examples.
Absolutely. I think crude oil is precious, and it's almost always a big challenge for the oil refining companies to manage and make use of every drop of that oil, right? So we do many things. We do a complete optimization of the configuration that these refineries and petrochemical complexes have. Our control systems that you saw getting assembled will monitor them, control them, optimize them, operate them safely so that there is no loss either of the material or any other, downtime in the production.
Well, if you have to, give us a rough number about the listed company, that's Honeywell Automation, what's the exposure to the oil and gas space? A rough revenue mix?
Well, it used to be quite large in the past because we started from the what we call as hydrocarbon processing industry, and which includes refining, petrochemicals, oil and gas upstream, fertilizers, fine chemicals, etc. But now we have pivoted to the new verticals like pharma, new energy. If I have to take a guess right now, I don't have the numbers yet, but it'll be in the range of about 30-odd%.
Before we get to the domestic bit, the exports bit, the contribution of exports as a percentage of the total revenues came down to around 38%. And in absolute terms, it came closer to around the 1100 crores odd mark. My question to you is, will we see exports move back towards the 45% odd? Would that be an ideal mix? Point number one. And point number two is, pre-COVID, you were at around 1450 crores in terms of export contribution, the absolute number. Do you see us getting there?
I think that's our objective, right? So we want to keep this healthy mix between the exports and domestic. This is one of the highlights of Honeywell Automation because it gives us a natural hedge, from the foreign exchange fluctuations, right? So we would absolutely like to drive towards a healthy mix, which I would call 45-55.
Yes.
And when it will happen, I think time will tell, but we are moving in that direction.
All right. And the 1450 crores, do you think you could get to it in, you could get to pre-COVID levels on the exports front in FY22?
I don't know whether we will be able to get there because it's a long cycle business. You have to keep accumulating those services and delivering those, right? So as the other Honeywell affiliates book the orders, they will hand over the services to us and we will turn those into the revenue. So I don't know the timeline that you're talking about, but certainly that's where we are heading.
But in an annual report, one positive, we've been talking about supply side issues, the chip shortage issues, exports hasn't been too good. One thing that really stood out was that the external order booking jumped up by 31%. So I want a couple of clarifications out there. One is this all domestic, point number one? And the other factor is it's all the listed entity, right? This entire order booking that you're talking about that jumped up by 31%.
Absolutely. So the numbers that you see in the public domain for Honeywell are for Honeywell Automation India Limited, the listed entity.
Yes.
And so the 31% jump that you talked about year over year is also for Honeywell Automation.
Okay.
And that is only the domestic part of the business.
All right, Mr. Gaikwad, I wanted to focus on the domestic business and two aspects here. The country is moving towards renewable energy, and you all have a role to play. And also, we've been talking about these smart cities as well. You all also had bagged that order from Bengaluru. I think that was roughly around 500 crores odd.
That's right.
Do you see more such opportunities that are coming in there, particularly on the domestic front?
Yes, absolutely. Let me talk about each one of them. First, let's talk about the renewables. Let me tell you, globally, not just Honeywell Automation, globally, our development funding, 60% of what we spend is going into the sustainability solutions, which includes the renewables side as well. So that is one. Therefore, we also adapt to that particular pivot that we see in India. In India, there is so much of solar energy generation that is already happening and is expected to happen over the next decade. But these solar plants are working only when the sun is shining. So you need a battery backup, what we call as the battery energy storage systems, when the sun is not shining. And therefore, that's the time when these batteries, which get charged when the sun is shining, will provide the power to the facilities or to the grid. And that's exactly where Honeywell Automation plays
a role.
its role.
Okay.
So that is your question number one. The second one, you talked about the smart cities and safe cities. They are a little bit different. So let me talk about Bengaluru, which is a safe city.
Yes.
And this came about after we had the central government, creating this Nirbhaya fund, which will be utilized essentially to make sure safety and the security of women in the metros, right? And this is one of the first projects that we bagged. What it is doing is, there are about 3,000 plus sites that we have to provide automation to. It's essentially monitoring and surveillance type of systems that are connected to a central command and control system, and that has an intelligence in the software that we are providing, which will do things like identifying between a friendly crowd and a non-friendly crowd. It will do the face recognition. It will do any traffic violation type of offenses that people are doing.
Yes.
It will also, make pictures clear in darker areas of the city, stuff like that. And if there are any things that are detected either by the personal monitoring of the people who are monitoring the system or by the software triggering it, then the nearest police station will get a signal and then they will send the reinforcement.
So you clearly have a role to play in that as well. Just since we're focusing on this, very quickly, if you could tell us about the safe city that you'll have back, the order that you're talking about. What about the execution of this? And also, there'll be other cities that will be coming up for bidding, other parts of the country as well.
Absolutely.
Has that already started? Do you see a good scope of business from there?
So I think let's call Bengaluru as a first and therefore a model sort of project. It is divided into two phases. We are almost in the middle of the first phase.
Okay.
Right? Let's say I said 3,000 odd sites, so maybe about 1,500 odd are getting completed, and then the second phase will start after that. And once they see the success of the first phase, we are confident that other cities will be also encouraged to implement systems like that.
Well, Mr. Gaikwad, you have been telling us that things are on the mend, which is heartening, particularly from a shareholder's point of view and from a normalcy point of view as well. Now, in the past quarter, you all did close to around 750 to around 800 crores, 780 crores to be precise. Do you believe that revenues from here on a quarter-to-quarter basis, they could see a growth? That's point number one. And the second factor is, what's been a little bit disappointing is, Honeywell Automation has always been known for its high-teen margins. Now, that's come to mid-teens. If exports are going to improve, if revenues as well, the operating leverage does play out, then do you see the margins as well improve closer to around those high teens, which, by the way, you used to do just a few years back?
Yeah, so let's take one by one each of those points, Nigel. The first one is on the revenues and the growth. We are focusing now on the growth that we see in the order book, right? That's our main engine. And we have to keep making sure that we get good quality orders that we can turn over a period of time that I mentioned to you, right? So if that keeps happening, then we see that we will get a tailwind on our revenues, and that's what we are all working towards. That's where everybody is working hard.
So they'll improve from here.
We cannot
You're
guarantee
optimistic
but we are optimistic about it.
Okay.
Right? We have to be cautiously optimistic about that growth because of the order books that we have already declared.
So that takes care of the revenue part of it. What about the margin part of it?
So the second point on margins, Nigel, I believe they will be still under some pressure for a few reasons. Number one, we will have the supply chain related challenges and the inflation that you see around the world. Right? The way we are going to tackle that, though, is also by looking at opportunities where we can adjust our prices accordingly, because we cannot get squeezed in between. Right? Number two, what we see is there is a heightened competition, right? And so different competitors react differently.
Yes.
And they have different margin expectations. At Honeywell, we certainly want to be very financially disciplined and prudent so that we would make good selection of the orders and the order books so that we are able to maintain some of our margin profiles that you talked about. And then the three, where we are having a sharp focus right now, is the cost control.
Yes.
I gave you an example of how we made the work remote and then we could save some of the costs on the projects. We will continue to look for opportunities to optimize the costs of delivery.
Well, Mr. Gaikwad, the other factor that the street has been looking at very, very closely, and there is a bit of a fear, mind you, is about cannibalization of business. I say this because Honeywell Automation is a listed entity, but you also have a couple of unlisted entities. So if you could clarify that to us, is there any cannibalization of business with regard to this? And also if you could tell us, why don't you bring both these entities together? Just merge it and make things simple. Maybe synergy benefits as well could come through.
All right, so let's clear the air on both those points. The first one, yes, there are a few other entities in India. Those are not listed entities.
Right.
Some of them are cost centers. We do a lot of development, and it's a very large number of people that we have employed in India that do that development and introduction of new products. So that doesn't count as an external business for us. And the second part is about the cannibalization. So we have a very clear demarcation of the portfolios so that there is no overlap or cannibalization from one entity to the other.
Okay.
And that's absolutely not an issue, not a problem.
But why not bring them together? Are you all getting the synergy benefits? One would think, why don't you just merge all the Honeywell companies here in India into one consolidated entity?
Well, that's the beauty of it, Nigel. Although these are different entities in terms of the legal entities, the leadership here works in unison. And therefore, we are able to drive whatever synergies we want to do, even by being organized in different entities, and we are leveraging those synergies on every project.
So merger is not a possibility?
No, we don't believe that it's necessary to drive the synergies, first of all. And I don't think I have any knowledge of we doing any mergers.
Okay, all right. Before we wind this down, Mr. Gaikwad, you have given us clarity on a whole host of businesses that you all are focusing on. How is business for Honeywell Automation as well ramping up? But my question to you is there any kind of speculation or any kind of possibility, actually? The street is speculating there could be a delisting. Any clarity on that?
I don't want to fuel any speculations at all at this point in time. And to my knowledge, there is absolutely nothing that I know of about any delisting activity. We are continuing the way we are operating at this point in time.
Okay, so business is on the mend. Final question though. FY24, can it be as good as FY19, which was the golden year? Do you think so?
That's where the efforts are. We are marching towards that. Only the time will tell.
It's been a pleasure talking to you, sir. Thanks so much.
Thank you, Nigel. Appreciate this.
All right, that was a deep dive into Honeywell Automation, but don't go anywhere. It's time to slip into a short break. We'll come back with another interesting stock. LG Equipments is in the spotlight on the other side.